Most traders fail because they don't even know what they're looking for. They jump into trades with no criteria, no risk management, and no structured plan. And that's why most people blow up, because they treat this like a casino instead of treating it like a system. And traders wonder why they keep losing money over and over again. So in this video, I'm going to be teaching you my day trading strategy that is so simple a 7th grader could even do it. By the end of this video, you'll understand how to truly trade a breakout, how to have a structured plan, and how to actually navigate the markets with a system instead of gambling. But before we dive into the charts, I want to go over what even is an actual breakout. A breakout is when a stock makes a move up, it consolidates, and it breaks out of a range. We're looking for a range break. A range is usually known as consolidation. When a stock moves sideways, it usually breaks either out or down. And my strategy is to look for the breakout out of consolidation range. And the number one mistake I see most traders having with trading breakouts is they either try to trade it too early and anticipate the setup, or they trade it too late and they chase. There's a perfect in between that you have to hit, and you have to catch these sniper entries, and I'm going to tell you exactly how I do that in this video. Let's get into it. Okay, so here's the first setup we're going to be looking for, guys. This is the stock RIG, and you can see it previously made a move up right here, and this is a pretty big move up. You can see it broke out of this consolidation range, made a huge move up. Now look what happened after the move up. We started putting in higher lows and lower highs, just consolidating back and forth for literally about 10 days. Now, after you see a big move up with consolidation, what this is called is a bull flag. And out of these bull flags, you're usually going to see another breakout out of the consolidation. And that's where we step in, and that's where we're usually buying at. So if we do look at this setup right here, you can see the breakout day was on this day. And today we actually had a really big follow through for a really good swing trade. I had people in my Discord even take this trade, and they banked hundreds of %. So if we scale down to a 5-minute time frame, because that's usually when my entries are, they're always going to be on a 5-minute time frame, and I'm waiting for a candle closure. If you want to trade the 1-minute setup, you can as well. It's the same exact setup. You're either looking for that 1-minute opening range break of the range or the 5-minute, and that's where you're taking it off of. Also, we make sure to watch the moving averages the whole time, because risk to reward is everything. So if you see a stock pulling back to the moving averages, you can always take an entry off of there too. So you guys can see the stock rig. It obviously broke out. Let's go to that 5-minute time frame and see where the breakout actually was. I was trading this literally live. I personally did not take it, but I told my group to. They made money off of it, and you can see this is your breakout level down here, right? Price opened, and we didn't really see a lot of momentum. The only momentum I would have seen in this day was right there, and if you would have entered off of that, that would have been a good entry. You can obviously see if it closed, pull back, you could have entered around there. Stop loss at low of day, you're still going to make money on that day. But where I would have wanted to enter is above these pre-market highs over here. If we go to like a 30-minute time frame, you can see that we had these pre-market highs. The candlesticks look weird. That's just because it's after hours, but you can see we had the pre-market highs, and then we also had that high of day level, which is right here. If we zoom in, you can see this is high of day right here. So this is where my entry would have been, right over high of day. You can see we rejected there. We came right back up to that level. We started breaking it. I would have taken it actually before the 5-minute close, just for that anticipation play, because you don't want to enter too late, right? You don't want it to close and you're entering all the way up here. Stop loss back into the range. If it has a slight pullback, there is a potential chance that you get stopped out. So that's why it's very important, as soon as you see it breaking, whether it's over your level and over the consolidation throughout the day, you want to take it right as it's breaking. And that's when you do your top-down analysis, which means starting from the higher time frames and going to the lower. So you can see if we entered on the 5-minute, as it's breaking, you can look for a 1-minute candle close right out of there. So if you can see, we're chopping really bad. We see a huge move right here. Well, not huge, but a move over our level. Bang. First 1-minute candle closure. Bang. Stop loss right in the range. Gives you more room. It's a better risk to reward. And if we scroll over and look at this setup right here, all right, let me just delete this to make it easier for you guys. You can see that the stock absolutely printed for the rest of the day. And this is where you would want to day trade it. You can day trade it or you can swing it. I use the same strategy for both swinging and day trading. It's just on the swing trades, I'm looking at a daily time frame and a weekly time frame. But for day trades, I'm usually looking for a flag on like a 1 hour or even a 30-minute time frame. So just get that through your head. Make sure you're looking at day trades on the lower time frame breakouts, like a 30-minute and a 1 hour wedge or bull flag, or the higher time frames like a daily or a weekly setup, that's where you're going to want to swing. So you can actually see like on this daily time frame, this could have looked really good for a swing trade, but you can also day trade it as well. And no, I don't use 0 DTEs. I will sometimes every once in a while, but I'm mainly using weekly expirations if I am trading these breakouts on a day trade. But you could just see the prime example is right here. Huge breakout, pulled back, went even higher, and the stock absolutely ripped for the whole day. You could have at least caught over 100% in one day. Let's just give an example. Let's say you have your last $100 to your name, right? You put that $100 into a stock option like this. If that $100 goes 100%, you just made $100 by putting in $100. That's a crazy return. So that just shows you with breakouts, you don't need a lot of capital to start. Everyone thinks that you need like $25,000 to start day trading or swing trading, and that's completely false. All you need is discipline and risk management, and no matter how much money you have, you can easily turn that to more money with discipline. Now, I won't say it's exactly easy, but it's definitely simple. It comes easy over time as you become more disciplined and as you form better habits within the market. So here's the next example, and this is going to be a breakout on the stock AMD. This would be a day trade and not a swing trade, because if you look at the daily time frame, yes, it's a good pattern and it doesn't look bad at all, but if you want to day trade this, you're going to be able to make a lot more money. And the reason I say that is because if you're day trading, you're trading with a 3 DTE or even a 1 week expiration, and a big move like this could easily get you 100% in 20 minutes. But with swing trading, you can get higher percents than that, but it does take longer. So it's really whatever you want to do. If you want to swing trade, you want to make sure that you're holding the stock for longer and you're picking a later out expiration. If you're going to day trade these breakouts, you want to pick from in between a 3 DTE to a weekly expiration. But yeah, you can see AMD broke out literally perfectly. If we go down to the 5-minute time frame, let's look for our entry, right? You can see right as market opened, it broke over our level, and that would have looked good. That's not a bad candle closure because you can see that it closed right above that previous day high. So you can enter right there. That's a good entry. Obviously, you would have been in a little bit of drawdown, which you have to accept. And all traders need to understand that it's inevitable to stay away from these drawdown periods. You're never going to be a sniper with your entry every single time. So that's why it's important to pick a weekly expiration, because if you do trade 0 DTEs every single day, you have to have a super tight stop loss, and you're not going to really want to risk more than 25% on these positions. So you can see if we would have entered there, stop loss would have went to low of day, that would have worked. But if you waited and if you stayed patient, let's say the first 15 minutes into the market, you could see it built a range right here and then broke again. There's that 5-minute candle closure. You would have entered right off of that, stop loss back down in the range. And look at this breakout. Absolutely amazing breakout. Beautiful risk to reward. And it even would have looked good to swing. But if you don't want to swing it, you can still take all of your profits that day and easily compound those gains. So you can see there's 2 huge examples of trades that I've literally seen play out hundreds of times in the past. This is a system that I approach the market with every single day. You see the breakouts work. You see they're very simple, they're smooth, and they're clear. It's super, super simple. Guys, the stock either breaks out or it doesn't break out. It's not like most of these shiny strategies on the internet like ICT or any of these made up strategies you see on TikTok. Most of those strategies make it way too overcomplicated when realistically trading is already hard and complicated as it is. Why make it harder on yourself and use a harder strategy that's more complicated? So that's exactly why I repeat the same system every single day. I trade breakouts and I stick to my plan. When I'm taking profits on these breakouts, I'm usually taking profits at about 25 to 30%, and then I'm letting my runners run. And when I'm stopping out super little, like 20 to 30% losses. You got to look at it like this. If we're losing 20% on an options contract, if you put $1,000 into that options contract, you're losing what? That means you would lose $200. But let's say your stock goes 60%. That means you're making $600. That is a positive risk to reward, and that is what you want to target. You don't want to take your profits too early, because if you're taking your profits and trimming most of your position at 20, 30%, you're not giving yourself a lot of room for a positive risk to reward. So that is a very important thing to know with breakouts. Your risk to reward wants to be positive, and once it's positive, you'll be able to hit bangers. You want to make sure that you are letting your winners run. With breakouts, they're not just small scalps. Guys, breakouts are meant to break out for a reason. They're supposed to go higher. They're supposed to make huge moves like stocks do. So make sure to hold your winners, cut your losses quick, and that's how you're going to get profitable. If you enjoyed this video of me teaching you my strategy on day trading breakouts, I have a lot more videos coming soon, so make sure to subscribe, like this video, and join my free Discord link in the bio. I'll see y'all boys in the next one.